August 12th, 2022 edition of News from the Front Lines of Business by DW Health Consulting, where we help you know your numbers so that you can grow your numbers. So here we are, Friday, another week has passes up here. A little bit of exciting news, I guess, to report. I guess the first thing we may have heard about is the Inflation Reduction Act. Most people are really kind of scratching their heads on I guess to put it nicely, an inaccurate name for this act here, but it looks like it's passed and it's kind of working its way through some final revisions here. But just to kind of take a look at it, so there's going to be a lot of hiring at the IRS, so a lot of agents are going to be added to the workforce, and most people seem to think it's going to take about 10 years. This act is spread out over, the money that has been allocated is spread out over 10 years, so hard to really say what exactly, I guess, the near-term effect of all this is. But as we look at some of the things that are included in the act, so once again, I don't know how any of this is really reducing inflation, but we look at the top line, revenue earned here. So we see you're going to impose this minimum tax on corporations that's expected to raise $222 billion. Some prescription drug price reform, another $265. IRS enforcement, so of the 80-something billion that they're spending, they're basically expecting to see $124 billion return on that investment. And we got some fees for stock basis and a couple of tax provisions that are basically going to raise more revenue. So the investment section of this slide here is where they're just kind of telling you what kind of things they are going to be spending this money on. So energy security and climate change, so there's going to be some extra tax credits that are in place. It looks like it's really more in along the lines of extension of what was already there from what I can see. But solar panels will be in there, efficient home improvements for residential taxpayers will be there. They're going to extend the Affordable Care Act, and some estimates had that reduction in health insurance premium for people that are on the marketplace insurance policy. But if you're not on it, I don't really see how that's going to affect you. So yeah, I don't know where the inflation reduction part of this whole thing comes in. But there are some benefits and some tax credits, and I think they looked at a few items here on a Medicare benefit. So if you're on Medicare, we have some less expensive prescription drugs and a couple positive things there. So yeah, there it is. I don't know what much else to say about it, but it's passed, and definitely this wasn't anywhere near as bad as that Build Back Better bill was that was going on earlier last year, until it was the end of late last year and early this year. They had all sorts of changes to IRAs and just a lot of bad stuff in it. This is not great, not bad, just it is what it is. So there you have it. So that's really the big news for this week on current event stuff. So going back to the discussions that we've had with clients, we always try and share some of these things here as these topics come up, and just kind of make sure if you're a business owner or you're have some rental real estate that you're kind of thinking about these things, and set up a meeting with us if you haven't already given this stuff consideration. But my second point today is the charging order protection. So if you have an LLC, what does that really give you? So I think most people understand. Well, if you have a small business, you establish a limited liability company, LLC, run the business through there, and you follow all the other rules. So you're a lawn care company, right? And during the course of your day, you hurt somebody and you get sued. So we know in that situation, the limited liability company keeps everything from your lawn care company separate from your personal home and everything else. So, barring any other kind of exception to the general rule, you have protection there if you're operating your business as an LLC. But another thing to consider is what happens if you get sued personally. So in the case of your lawn care guy, let's say you're driving your car around just not for work, right? Just something happens and you're just off duty driving, get in a bad accident, and somebody sues you. And let's say your automobile insurance, has the $25,000 per person limit, and this person that you hurt generate a lot more than that in medical costs. Well, now they're going to come after you personally. So what can they do to your LLC? Well, if you're a single member LLC, you might have a problem because those single member LLCs don't provide charging order protection. So if you get sued and there's a charging order placed by the court, for some settlement, and they start going back to personal assets, so they're going to look at your house and kind of rules on how that works out, but they're going to look at what you have, and if you don't have enough other liquid assets, the odds of them taking stuff from your LLC are real. It's a real possibility that they can take all your lawn care equipment and throw you out of it. So there is a way to establish other entities, just charging order protection entities, basically, where you kind of can avoid that. So it's definitely worth considering. So if you're in a high risk profession, your lawyers and doctors and such, where there's a potential there for some sort of malpractice or error suit, where most people have insurance in place to cover that stuff, but there's always the possibility something really bad happens, you exceed the limits of your policy, and now you got problems on the personal side too. So having this charging order protection in place can protect some of your rental properties and other assets if you structure it properly. So definitely food for thought there. So bounce it off your attorney, or come meet with us, and we'll kind of point you in the right direction of some people that we recommend. I guess on a somewhat related note to that, starting out in real estate. So another topic that has come up in a couple of webinars I've seen this week is you have a house that you live in and you want to start renting it out, right? So in a typical scenario is you've been living in a house for 10, 15 years. It's going up in value, so we got some low basis in it compared to today's prices, and the best way to do that. So one option that we see is if you sell the house to an S corporation that you own. So even though you're the only owner of the S corporation, there is a provision where if it's an arm's length transaction, you got to jump through a couple hoops, but not a big deal. But you could sell your house, your personal residence, to your S corporation, and let the S corporation then operate it as a rental property. So this works. It does not work if you're going to still live in the house, right? So this is only if you're considering the most tax efficient way to get out of a house and maybe move somewhere else. So you do this sale to your S corporation. That sale price is now going to affect the calculation of depreciation. So now you have a higher depreciation expense. You're going to rent it out, so those things are going to kind of offset some of your gain. The gain on actual sale is excluded because if it's your personal residence, and you meet that 2 out of 5 year test, no capital gain, and you can just move on to whatever you get next. So get a mortgage or whatever. So you don't have to actually have a lot of money transpiring. You could also hold a note where the S corporation owes you money back personally, and as the rent payments come in, it repays you. So we like that because one of the alternatives is sell it outright, take the money, dump it into something else. But we like real estate as an asset. So I'm always hesitant to get rid of any kind of asset once we got it, especially if it can potentially be revenue generator. So depending on where it's located at, it could be a couple $1,000 a month of rent revenue, and you still got the asset. That can generate money. You could probably possibly have some equity in it that could be potentially borrowed against for other deals you might have going. So food for thought there. So it's a strategy that's been used and talked about at least recently with some of my sources. Somewhat related to that is beginning in the stock market. So we have some young people working for us here, and they just recently started out the E-Trade accounts, and you only got a few $100 in the accounts, not a lot. Your general advice is always have a diversified portfolio. Look at some low-cost exchange traded funds and get a basic balanced portfolio. But to get a younger person at least interested in the market, another thought I had here is, and that's what we end up doing in this case, just buy one stock of a big national company. So I found with a little bit of a skin in the game, you watch what's going on in the market a little bit better. You learn to watch that company, learn kind of how ups and downs in the overall market can affect one stock. So it's a good educational experience. That's not exactly the same way with an exchange traded fund that has 500 stocks in it. So In this case, we went with just ExxonMobil, the big company. They got assets all over the place. They're historically been very well run, always in the news, always in the indexes. So you can just no shortage of information. So when you're starting out, the thought there is just get a big stock and watch it and start learning how things work. And then as you get a little bit more money, then you have to definitely make better decisions as far as allocation of your assets go. But why not get one stock if you only got a few $100 and watch it and let the dividends reinvest and learn all you can about how things really work. Because the more books you buy, the more confused you can get, and the more complicated I think things can become with the publicly traded equities. So with that, our week is coming to an end here. My thought for today is a great man is hard on himself, a small man is hard on others. So watching some of the news, and an old former employer of mine, and I just remember how some of the leadership at that place definitely was not a follower of this philosophy. So I kind of remind myself as that. So I'm to kind of push myself harder as I'm dealing with managing things, and be more understanding of others, and try to coach people up and bring people along, and kind of stick with that philosophy. Hard on me, easy on others. So with that, we finish up the week here. So mid-August, still hot, still rainy, but here we are. I guess you get the September 15th and the October 15th extended deadlines coming up. So don't forget about those if you still got some tax return information to get to us. But with that, we'll see you next week. Bye.